Today we're talking about the meal expense deduction for business owners. And as we've kind of been talking about last week, where we talked about this idea of maximizing deductions, the meal expense is a great opportunity to do exactly that. And if you haven't checked out our ultimate guide to maximizing business deductions and write-offs, go there now, go to taxsavingspodcast.com/deductions. But to start out this concept of maximizing meal deductions, let's just talk about the basics. Basically, the IRS says that food and beverage costs associated with operating a business are deductible. Now, they must be ordinary and necessary and, of course, related to your business. So food and beverage costs associated with your business, and that could be many different reasons. That could be meeting with a client, an employee, a vendor, traveling, anything, any food and beverage costs associated with your business is tax deductible. Now, there's different types of deductible amounts, and that's going to determine how much you can deduct from that expense. But just know that if you have food or beverage, generally speaking, related to your business, it's going to be deductible. And this is an area that we talk about taking advantage of a lot when it comes to maximizing deductions. So if you've been around a while, you've heard me talk about this idea of pre-tax spending versus after-tax spending. And just a basic concept of this is that after-tax spending is spending that you do after your money's already been taxed. So think of it as if you take your family out to a dinner to celebrate a birthday for your child. That is considered not a business expense, and you're using after-tax dollars, money that's already been taxed, to pay for that meal. But now as a business owner, we have, within our business, we have sales or revenue, and then we have all these expenses that go into our business, and whatever's left over is what we get taxed on. So if we do any spending within the business, that's considered pre-tax spending. It's spending that is done prior to those funds being taxed. And so meals are a great opportunity to turn after-tax spending into pre-tax spending. Now, let's look at an example where you go out with your family. Maybe some of your family members are part of your board, your business board. And so you go out for dinner, you talk about business. That's a business deduction. It's a board meeting for your family. That's a business deduction. And now we moved after-tax spending into pre-tax spending. So let's talk a little bit about the different types of deductibility of expenses, because even though a meal expense is deductible, it's not necessarily 100% deductible. So dining with others. So think of things like a client, dining with a client, dining with a potential client, a potential staff member, a current staff member, dining with a vendor, all those kind of dining with others that are, of course, business related, are going to be 50% deductible. So you get a 50% deduction. You spend $100 on dining, you can run that through the business, but your actual deduction when it comes to your tax return is going to be 50% of that, $500. Dining when you're traveling, and this includes if you're traveling alone. Now, this must be for business. So dining when you're traveling for business, including meals by yourself, are, again, 50% deductible. These are deductible business expenses. Now, in order for a meal expense to be allowed when traveling, the travel must meet what the IRS calls travel status. And that means you're either overnight or outside of your normal commute. So you go visit a vendor in 2 cities over, have dinner with them, stay the night, come home the next day. That's considered traveling. And any meals associated with that overnight travel are considered tax deductible up to 50%. Office meals, office food, 50% deductible. If you have any company events, presentations, so think of it like, let's say you're doing a marketing presentation, and as part of that, you're going to provide food for those that are attending. That's actually 100% deductible. So the costs around that are 100% deductible. Of course, if you own a restaurant or anything where meals or food are part of your cost of goods sold, always 100% deductible as well. But again, company events, presentations, maybe marketing presentations where you're providing a meal to those that come in, sit down a presentation you're doing, 100% deductible. Company parties, 100% deductible. Now, the majority of that, in order to qualify as a company party, the majority of the people there must be part of a non-tainted group. So tainted group members would be highly compensated employees or those that are associated to or own the business. So in order for a company party to be deductible at 100%, the majority of the people in attendance have to be part of a non-tainted group. The other thing that often comes up is entertainment. Long before the Tax Cuts and Jobs Act, entertainment used to be deductible at 50%, just like many of the other things. But that was one of the things that they took away. Entertainment is no longer deductible. Now, on that entertainment idea, although the entertainment piece is not deductible, the meal portion of entertainment is. So let's say you take a client out to a baseball game. You pay for the tickets, you dine them at the baseball game, you get drinks at the baseball game, you're talking business. It's a business meeting that you just happen to be doing at a baseball game. Those baseball tickets, not deductible. The tickets to the baseball game are not deductible. However, the meals and drinks associated with that business meeting that you had, those are deductible. Again, up to 50%. Now, the key thing here is that you need to be able to separate the meal piece from the entertainment piece. So a lot of times, if you get a suite at a baseball game, football game, basketball game, whatever it might be, but you get a suite, a lot of times they'll include a food package with that. And you want to be sure that when they send you the invoice for it, they have a separation of how much of the total cost was related to the tickets or access to the suite and how much was related to food. Because again, the entertainment piece, not deductible, but the meal piece is, as long as you can separate that out. Now, with entertainment not being deductible, there is a loophole. And I say loophole in quotes. There is a potential loophole with this, and that is for entertainment primarily for the benefit of employees that are not part of a tainted group. So similar thing goes to that company party. Let's say you take your whole team out to an annual retreat. As part of that retreat, you take them to a baseball game or you take them out somewhere for entertainment. Assuming that the majority of the people in attendance are not part of a tainted group, that can be 100% deductible, even though it's considered entertainment. So there is a little bit of a loophole there. Now, again, who's part of the tainted group? Those would be folks that are highly compensated employees, owners of the company, or related to owners of the company. So more than 50% of the people in attendance have to be part of that non-tainted group for entertainment, primarily for the benefit of employees, to be considered 100% deductible. So that's a cool little thing to think about as you're kind of entertaining employees is, hey, we do have some options here. If we want to do an annual retreat or an annual party or something like that, you can still get a deduction for that. And make sure you record it separately within your bookkeeping so that there is a clear distinction of that. This episode is brought to you by TaxZone. At TaxZone, we understand that saving taxes can be complex and overwhelming for business owners. That's why we're here, to be that tax strategist in your back pocket, ensuring that you pay the least amount in taxes as legally possible. With TaxZone, you receive a tax savings blueprint tailored to your business needs, unlimited access to our team of tax experts, and an annual one-on-one live consultation. You'll also have access to our comprehensive training with videos, downloads, templates, workbooks, guides, and so much more, along with our monthly live trainings to keep you informed and in control. Thousands of business owners across the country trust TaxZone. It's time you did too. Visit us now and take that first step towards paying the least amount in taxes as legally possible. There has never been a better time to join TaxZone. Do not forget about our 30-day money-back guarantee. We guarantee that we will present tax-saving strategies that will, at a minimum, cover the cost of your subscription fee or your money back. This is your risk-free invitation to explore the benefits of TaxZone membership and how it can transform your approach to tax planning and savings. Go to taxelm.com. That is TAXELM.com. Now back to the show. So let's talk about some strategies around meals. First off, keep detailed records. This is the key to backing up and supporting your deduction. Keeping detailed records right directly on the receipt. Who, what, where, when, why. I went to lunch with Jason and we talked about him sending referrals to my business. Write it on the receipt, take a picture of it, put it on file. You'll probably never need it, but if you do, you know exactly what that meeting was for. So write on the receipt, who did you meet with and why was it business related? And that's it. That's all we need to do to keep those detailed records. Have the business purpose of the meeting on there as well. So again, met with Colleen to talk about a new marketing strategy that we're doing. Done. Also, a planning opportunity with meals is to leverage company events, as we talked about with the entertainment piece. We can take 100% deduction for entertainment for employees. So there's opportunities to leverage some idea of company events. Or maybe you're hosting a sales presentation or something like that. Again, another opportunity to get 100% deductible if you're providing a meal as part of a marketing presentation to potential clients or something like that. And also think about solo meals and drinks. Remember, if you're traveling, meals that you have alone are tax deductible up to 50%. But if you're not traveling, let's just say you go from your home office to your regular office and you stop at Starbucks in between there. that is not a deductible business expense. But let's say you go from your home office and then you stop at Starbucks, have a meeting with a potential client. That meeting that you have coffee at and that you have maybe a breakfast sandwich at, that's 50% deductible. And then you go to your office. So that solo meal that you took when you were not traveling, not deductible, but you throw that in there with a business meeting, now it's deductible. Again, when you're traveling, any meals you have solo are tax deductible, as long as it's an overnight trip or outside of your normal regular commute. Now, again, let's talk about some common pitfalls when it comes to the meals deduction. First one is failing to document properly. Again, this is probably the easiest part of this whole idea of maximizing deductions, is just making sure you have your records in place. Keep your receipts, write directly on them, who, what, where, when, why. What was the business purpose? Who'd you meet for? You have it on file. More likely than not, you may never need that again. But if the IRS comes knocking a year and a half from now, you're going to have no clue who you went to lunch with and why you went to lunch with them. So have that documentation on there. And the other one is don't get greedy. As business owners, this is a great gift that the IRS gave us. The opportunity to move after-tax spending into pre-tax spending, but don't get greedy. Make sure you're smart with it. If the IRS looks at your spending and sees that your total expenses were $10,000 and 9,000 of them were meals, it's probably going to raise a red flag. But let's say you have $100,000 in expenses and 10,000 of them were meals. Well, that might be more acceptable. So don't get too greedy, but do not be afraid to take advantage of what's readily available to you. The other thing we want to talk about is when we talk about meals, there is oftentimes people go out on lunches, they go out for dinners with people that are friends, family members, and they think, well, this can't possibly be deductible because I'm just having lunch with a friend or a family member of mine. But so often, as business owners, we are always talking about our business. We're asking for referrals. We're asking for advice. So I just want to encourage you to take advantage of what's available to you. Oftentimes, you're having lunch with a friend that happens to be someone that could be someone that can refer business to you. Or you're having lunch with a friend and you're talking about your business and the struggle that you're having with employees, and they're giving you some advice on it. So even though that you might be having lunch with someone that you consider non-business related, a friend or a family member, if you're talking business, so often, more than not, you can tie that to a business purpose. So again, take advantage to what's available to you, but do not get too greedy. Again, let's wrap this all up. Meal expense deduction is an incredible way for small business owners to move after-tax spending into pre-tax spending. And meal expenses is just part of a whole picture of this concept of maximizing deductions. How do we turn after-tax spending that's done after our money's been taxed, to find a business purpose for it and move it into pre-tax spending? If you want our guide on that, we have our ultimate guide to maximizing business deductions and write-offs, and you can download that for free at taxsavingspodcast.com/deductions. Again, let's go through the basics. Food and beverage costs associated with operating your business are tax deductible if they're ordinary and necessary, and again, have a business relation to them. We will always want to be thinking about this opportunity to move after-tax spending into pre-tax spending. Now, even though meal expenses may be deductible, they're not necessarily always, and more often than not, deductible 100%. So when we looked at the deductible amounts of meal expense, there's different percentages of how much of that total meal is actually deductible. So dining you do with others, clients, prospects, staff members, vendors, things like that are all 50% deductible. Dining that you do when traveling, and this can even be alone if you're overnight. So what's considered traveling is overnight and outside your normal commute. But dining that you do when you're traveling are 50%. Again, that could be with whether you're with a client or a vendor or someone else, or if you're doing it alone. As long as it's business-related travel, any dining is 50% deductible. Any office meals that you have or food that you have around the office, 50% deductible. Now, let's talk about some of the 100% deductibles. Company events, presentations, or maybe if you even have food as part of your regular service, think like a restaurant or something like that. Those are 100% deductible. So you do a marketing presentation, you provide a lunch for those that show up and listen in on what you can provide to them, 100% deductible. A company party, 100% deductible, as long as the majority of the group is part of a non-tainted group. Again, who's part of a non-tainted group? That's going to be the non-tainted group is going to be highly compensated employees, or the tainted group is highly compensated employees and owners of the company, or those that are related to owners of the company. So as long as you're hosting company parties that are for the majority benefit of employees, not part of that tainted group, 100% tax deductible. Remember, entertainment expenses are not deductible, but the meals associated with them are. So you take someone to a baseball game, the tickets to the baseball game are not deductible, but any meals or drinks that you have at that baseball game, as long as it's business related, are considered deductible. And don't forget about our employee entertainment loophole. Again, if you have employee entertainment that's primarily for those that are part of a non-tainted group, that employee entertainment can be 100% deductible. Some of the strategies around this, just keep detailed records right on the receipt, who you met with, the business purpose for it, keep documentation of it, and try to dig for business purposes. Whenever you're swiping your card, whenever you're having a meal with someone, think, did we discuss business? Because I bet you, more often than not, you're talking about your business in everyday meetings and everyday lunches and everyday dinners that you're having. Find that business purpose right on the receipt, run it through the business, and take advantage of what's available to you. Remember, if you are having solo meals and drinks when you're not traveling, not deductible. But if you go from your home office to Starbucks, have a lunch meeting there or have a coffee meeting there, that's deductible now. If you go from home, drive through Starbucks and go to your regular office, not deductible. Solo meals and drinks are deductible 50% if you are traveling. And traveling means overnight stays or outside of your kind of regular commute. Remember, keep documentation of this. Write on the receipts, take a picture of it, store it digitally. Don't get greedy, but do not be afraid to take advantage of this gift that the IRS gave you. And this is just one topic in this idea of maximizing deductions on how we can turn after-tax spending into pre-tax spending and continue to save taxes. I hope you found that helpful, and I will see you next week.
This has been another episode of the Small Business Tax Savings Podcast. If you enjoy our weekly episodes, please leave a review and share with other business owners. You can find previous episodes and more information at www.taxsavingspodcast.com. Thanks for listening and have a great day.